Hello, this report is the end of July, beginning of August on finance and economics. Let's start with China. China's finally starting to open up again, so that should be good for the world economy. The United States has sent some people to China to talk about better negotiations, such as Janet Yellen and Anthony Blinken. Also, John Kerry made a visit to China to do with the green and the climate control issues. Good news on crypto as far as XRP. They won the lawsuit against the SEC, so some of the regulatory issues involving crypto is out of the way. Be prepared for the student loan forgiveness program to begin again in October, to end in October, and you're going to have to start paying your loans again. Another thing that happened was affirmative action. SCOTUS decided that to overrule affirmative action. That's another element that happened. Bond yields have been dropping slowly. That's been helping the stock market. And for those of you who have credit card debt, we are probably at one of the highest points, approaching $1 trillion in credit card debt. That's incredible. There's something called PMI ISM. It's the Purchasing Managers Index. Why that's important is because that tells us whether or not purchasing managers, what they're going to be doing in the future. Anything below 50 rating is not really that good. The current rating is 46. Purchasing managers look at the amount of orders, the amount of sales they see, the inventory, the backlog, and future orders. So that gives you an indication on what the business people think of the economy. There's something called a yield curve. A yield curve is a curve which is 10 years and 2 years. Let me explain the difference. If you have confidence in an economy, you're going to invest in a long-term investment and expect a higher return. That's what usually should happen with bonds. But now what's going on is the 2-year bill is yielding a higher interest rate than the 10-year bond. That's not good news, because what that tells people is that people don't have confidence in investing in something for 10 years. Bidenomics, the president announced Bidenomics. Let's see what happens with that. In other countries, in the United Kingdom, inflation has finally hit a lower level, but recession fears are still very much true. Retail sales have been down. Also, the consumer price index has dropped, which is a good thing because it shows that inflation is starting to curtail. So the inflation rate for June was 0.2%, which is pretty decent. The oil revenues for OPEC are at their highest in 10 years. Their prices seem to be going up, and there seems to be some split in OPEC, whereas the United Arab Emirates seems to be want to go off on their own and raise rates. The Chinese also have announced an embargo against precious metals coming to the United States, so that's going to really hurt us a lot. Payrolls, jobs were 290,000 jobs, so that's been consistent. For the first time in a very long time, real wages have caught up to nominal wages. What that means is, for the first time, a person is making more than what they would, than the inflation rate. So that's really good news. Interest rates are at an extremely high rate. We expect in the second half of the year a global slowdown for GDP. The federal funds rate, which is the rate which the Federal Reserve lends its best customers, has gone up, and The service economy is booming. Airlines are booming. Bitcoin prices are dropping. The employment rate is falling slightly. But the unusual thing about it is the housing market is doing very well. The housing companies are doing very well. The Fed meeting 2025, it's going to be a 0.25% rise for that. Expect the chances of recession to be subsiding somewhat. So it's likely that we might have a soft landing as opposed to a hard landing. That's just about it. If you liked the video, please give me a thumbs up and have a great day. Bye.